Hey guys, what's happening? Dan Darrow here with another Options in Play video update. Today's video is going to be about trade management. We try to do a video on this every couple weeks just because it's super important. What we're going to talk about today is how you should approach a volatility bet that doesn't move right away. So it was a weird week for stocks. Definitely a lot of good. Averages were pushing higher most of the week. Friday, it's been kind of lackluster, but averages, pushing to 52-week highs. But the action overall was kind of inconsistent, and probably some of that has to do with tech lagging a bit. So you had the Dow, which is you can see like a real nice move. Dow breaking out to a new 52-week high. SPY breaking out to a new 52-week high. But then you have the Qs, which are still kind of like stuck in a lower range here. You can see have yet to get back to retest that late August momentum high. And because tech is so important, basically how tech goes, so goes this market at least for most of the past 2 years. I mean, that's been the case. So, some choppy action in tech has led to some kind of choppy action overall. And basically, you can see that in some of like the key tech reports the last couple of weeks, right? So, Adobe had a pretty nice number here. Had a small follow through the next day, and then has promptly like given it all back. Micron, a little bit different. Micron got hit like the month before, rallied right into earnings, and then gapped down after kind of like a mixed number last night, and it's just hanging out in like a slightly lower range. So just not much going on there. And then we come to Oracle, which is the focus of this video. So Oracle had a mixed report also, kind of like Micron. Missed on revenues. Guidance was slightly below the street. The day of earnings, you can see it gapped down near recent support in the 100-day, but then it recovered most of those gains. That actually briefly went green during the session at 1.2. Now, though, you can see three back-to-back strong sessions, and from where it was down around 47, it's now trading up near 51. It's basically the complete reverse of what Adobe did. Adobe was one day up, and then basically straight down after that. Oracle is one day down, and then like straight up. So Oracle was a volatility bet for us into earnings. And what that means is that we were targeting a large move either direction via strangle in this case. So we wanted to see either a sharp drop back down to like this 45 longer term support range. You can see like the further back you go, it's more significant. So we wanted to see either a drop down into that area if the number was disappointing, or on the upside, you can see like this really well-defined channel here, and then this like clear gap from March. So on the upside, like there was a pretty well-defined level resistance and a well-defined gap up near 52. So for us, the stock seemed like it was set up well for a big move either direction. We didn't care which, only that it moved a lot. And the mixed report basically kind of took that trade off the table a bit. So it led to like the choppy initial move, and the day of earnings. When it opened and rallied and was hanging around like the slightly unchanged area, both sides of the strangle were underwater because it didn't have a big move either way. So at this point, like, how do you manage that, right? Both sides of the trade are underwater. So typically, for a strangle or a straddle, one of these volatility bets, On the initial day of the move, so in this case, like the day it reported, or if they report after the close, then the next day. So the day that it trades after earnings, um, we basically we basically won't cover. Typically, we won't cover either side unless uh, we can get nearly all of the net debit back, or B, it's moved nicely in our favor and we could cut risk and roll. So what that means is, say for instance, like it has like a decent sized move, but you don't like the way it's looking, or it just doesn't seem like it's going to extend further, and you can get most of your money back. Then we may look to just cut the trade, loose around around like the unchanged mark for like the strangle or the straddle, and then just revisit it, a different setup. Or obviously, if it's in the money, then that gives you some optionality, and you can either like close out the whole trade for a profit, or maybe like take some off and then roll to like a different contract. Like kind of manage risk that way. If the trade So if the trade doesn't have, or if the stock doesn't have a big move and both sides of the trade are underwater, though, we're going to tend to hold more often than not. And the time frames for each trade will be slightly different. So you can't always be as patient, but we want to hold. Most of the time, we want to hold to see if there's a delayed move for us to give us a chance to recover most of the initial debit. Or even possibly capitalize on the trade. I mean, if it's like a delayed move and ends up being like a huge move, you can still make money, but it's just not that initial quick pop or drop. But that's basically our typical thought process when it comes to these volatility bets, to these strangles or straddles. If it's if after earnings the trade is like flat or in the money, then we can either close out or roll. If both sides are down, then we want to hold and see if the stock has a sharper move to allow us to cover flat first. And if not, so if it never really has like a sharp move and time's starting to eat away at the premiums, then we're gonna have to determine an exit based on the setup. Each setup will be slightly different. Because like the stock will be different, and also the time frames of the trade will be different. But we're going to determine an exit based off a combination of how the stock is setting up and the time remaining on the position. So in Oracle's case here, this really nice bounce has put Oracle at 51. Back-to-back days, it's hit 51 and kind of stalled. But as you can see on the chart, I mean, now that it's come this far, I mean, there's a really, really obvious gap to 52-ish in that range, which if it got there would more or less like put the trade, in the flat range. Not quite exactly, but in that range. But like technically, it still looks good, right? The thing we have to consider next week, though, is that the options expire on Friday, so. There's only 5 days remaining to trade these options, specifically like the 51 call. So if it starts to tighten up around 51, which it currently is doing, or even if it maybe pulls back a bit, we're going to have to determine whether we want to cut the trade loose or possibly roll. I mean that's another alternative here. Is you could if it's still setting up and you're just running out of time, and there's some premium, then you could roll just to give yourself the ability. So, overall, like the trade is starting to work, and our target's still up closer to 52, which at this point would help recover a good portion of the net debit of the trade. But we're gonna have to keep a close eye on it because time is not our friend at this point. Theta is gonna start doing some damage here if it doesn't keep moving as quickly as it has been. So the thing to take away from the video: sometimes the market's flying around, and sometimes like this past week or last 2 weeks, it's super choppy. There are going to be opportunities, obviously, in every tape, and oftentimes the difference between winning and losing is going to come down to how you manage the trade. So, that's why you'll see us talk about trade management or different types of trade management as often as possible, just because it's really, really, really important to the long-term success of a trader. So, I hope you guys had a great week. Have a fantastic weekend, and before you know it, October earnings going to get fired up here. So there'll be plenty to look forward to in the coming weeks. Again, we'd love to hear from you, so please reach out. Please, 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 send along comments, questions. There's something we can tackle in the video. I'll try to do it. Have a great weekend again, and I'll talk to you guys next week.